Alright, good morning. Let's go over today's trade plan. So in the overnight session, ES held above the 36 quarter to 36.75 support, and that was really the ideal spot that we wanted to see ES hold in the overnight session. So that strength from yesterday continued, and that was the expectation. Then we got the positive employment report, and ES pushed to a new high, a new all-time high. So at this point, we know that buyers were in firm control, and any pullbacks into support can offer us decent long setups, and at the very minimum, these are safe areas to buy because we can get some rotation, some quick edge, and then kind of see where the trade's going. Whether a good momentum comes in, follows through, or if it's just a short-term bounce. But bigger picture, we've clearly broken out from a balance area, and we're just continuing higher. The other markets don't really have any major resistance right now. NQ is making new highs on the year, and the next spot that it could run into resistance is closer to 3880 to 3900. So it's still about 100 points up, where it can run into some resistance along the way. So there's still some upside potential in NQ. ES is at all-time highs, so there's really nothing stopping it from going higher except the average volume and the range that we can expect on the day. So on the upside, ES can quite easily tag 45 half and potentially 48 quarter to 50 quarter. But I think the upside is limited to one of those areas. We've made a pretty decent move yesterday, and because of that, even though we know buyers are in control, there could be some limited upside now, right? Because we've had a pretty decent range expansion after yesterday's session. At this point, there could be limited potential left in the market short term, right? So on the day time frame, we may only have a move up to roughly 48 or 50 left in this, or maybe even 45 half to 46. There may not be too much more in this move, at least short term, and then the market can start bouncing. So, for that reason, we have to be careful buying too high because there may not be enough in it. And I think it's going to require traders to be a little bit more nimble and flexible and, manage their risk a bit more closely, because if you're buying high and the trade's not working, then there's not enough reward potential to just sit in that trade, right? Then it's probably a good idea in this environment to take that break even out and look for a better spot. Now, on the NFP report, the move started at roughly 39. So at this point, if we get a pullback to 38 to 40, even though there can still be some edge there, we're going to have to be careful because, a true breakout move shouldn't retrace 100%. So, short term, it calls for some caution if we get a pullback all the way down to 38. Doesn't mean that, buyers can't step in there again and push it higher. It's just that we have to be a bit careful and, read the market in real time and see, whether the market can go right from there, or if there's some momentum on the downside short term, then maybe ES will push lower towards 36 quarter to 36.75 before it finds buyers, right? So it's just going to require a little bit more flexibility. The directional bias is still going to be to the upside, even if we get a deeper pullback. So, we can come down to 33 half to 35, and the buyers would still be in control. Even a pullback to 29 quarter to 31 quarter wouldn't invalidate the overall upside bias, and if anything, we would be exhausting the range on the downside then, and we'd have even higher odds of buyers stepping in. So, on the downside, what I'm envisioning is that if we do get some selling off the open and we go lower, then we may simply be extending the balance that we developed yesterday afternoon. Yesterday afternoon the market balanced above 36.75, and at this point, if we break 38 half to the downside, then the market may simply be extending that balance just by a little bit before it finds buyers again and goes back up towards 42, 43. So on the downside, if we come down to 36 quarter, 36.75, buyers can step in there. If we get a little bit extended pullback, 33 half to 35, the selling could actually shut off there, and buyers can step in and reverse the entire move. But now that the employment report is out of the way, the main catalyst is out of the way, it could be a bit slower price action, right? We've had a good move yesterday. We've had some decent upside in the overnight session. Now there's limited upside potential, and at the same time, I think that the volume could start dropping off once we start here. So I'm expecting some buying early in the morning, but I think early is probably the best time to trade. I think the afternoon could be a bit tricky. I think the best trades are going to set up either early in the morning or there's not going to be too much opportunity left for later in the day. So early morning, any pullbacks, we'll look for long setups. We're not looking to short this market. It's making all-time highs. The equity index markets are finally in sync, where NQ is also making new highs on the year. TF is catching up. So I don't see any reason to look for short setups in this market, unless something very, very clear sets up in real time. And even then, you have to be very careful with risk management. And if it's not working, you have to jump out. So even more cautious on the short side. Long setups, conservative, or any pullbacks into support, expecting edge at pretty much every support zone along the way. That's really the main idea. So, off the open, let's see how well the buy side is able to hold it up, and we'll take it from there.